The median home sold price in the Treasure Valley is back on the way up. And the one-off, basically fluke, rise in inventory is back swinging the other direction, which may be indicating that we're starting to lead into our normal patterns. Although Ada County seems to be showing some decent things, Canyon County definitely took a turn in one direction. Welcome to Mikey's monthly market updates for September of 2023. Let's go ahead and get to that data and see what happened in the real estate markets right here in the Treasure Valley right after this. Well, welcome back after that short break, everybody. Mike Petras here with MPRE Residential, powered by Next Home Treasure Valley, and welcome back to another episode of Mikey's monthly market updates for September of 2023. Now, for all of you that are new to this channel, this is going to go ahead and break down what is happening in real estate right here in the Treasure Valley, known as the greater Boise, Idaho area, if you are thinking about buying, selling, or investing right here. And of course, if you are looking to do that, or you're looking for more information overall, or even just have some general questions, feel free to give me a call, shoot me a text, send me an email. We'll be more than happy to answer any questions regarding anything in this video and about the Treasure Valley in itself. And we'll be more than happy to represent you in your transaction. So let's go ahead, let's dive into Ada County, and let's see what happened with the data for this month. And as we can see by this graph, starting off with Ada County, boom, the median home sold price was on the rise again, sitting now at $543,904, which actually brings us up from last month. Once we get over that slide in the 6 month, we're at 4.39% since then. But if we're looking all the way back at when we were at 540,000, now we're 3,904 above what we had in January of 2022 again, which is just up 0.71%. But again, starting to cross that threshold level and starting to chip away at the losses that we took during the market correction that hit late May, early June of last year of 2022, and basically kind of filtered out and stopped in Ada County and Canyon around January of 2023. So, but since we were at the market correction at the highest peak at the 602,250 down to what we got today, we are still down 9.68%. But chipping away at it, we'll just have to keep monitoring the data. And as you can see in the red there at the 487,495, January 2023, when the market correction really kind of ended itself, Ada County is up a whole whopping 10.28%. Craziness. And even though I mentioned from last month, we are up 4.39%, as you can see from the 520 to the 543,904 that we've got. But let's just go ahead and take a look at the breakdown of what's happened over the last 6 months. You can see up and then back down. And now are we on the way back up again? Well, I'm kind of guessing more or less, and especially going into the holiday season, which typically home prices do come back down during the holiday seasons, that will probably more or less stabilize until we really get to about Q1 of next year into Q2, back into the hot season. And then we'll just have to see what mortgage interest rates are going to do to the buyer's demand overall. Because if you've been paying attention, mortgage interest rates are definitely not friendly right now. But will the markets actually go down because of mortgage interest rates? Well, look what happened this year. Mortgage interest rates started diving into the 6s and 7s, and yet we still had a healthy market right here in the Treasure Valley. And I kind of anticipate that to be the way that it's going to be. So as we go on to this video, I'll go ahead and explain that a little bit more in depth, but let's go ahead and let's take a look at the data and see what's happening with our inventory, supply and demand, which controls pricing anywhere when it comes to real estate. And as we can see by this graph, that one jump that we took up in August, which was really kind of an oddity, started to turn the corner. So more or less, we can probably anticipate our inventory to start now getting into the seasonal swings of real estate, which usually happens around the holiday season, Q4, Q1, when things get slower as kids go back to school. So right now we're sitting at 1,512 homes for sale, 577 sold. But let's go ahead and take a look at that pending line 2 in the orange. We can see that it's starting to tick on down. And overall, as we've seen over the years, it's continuing to tick on down. So because mortgage interest rates are just going to kind of keep that more or less at bay. But it's also going to keep the inventory at bay, which I've said many, many times over. Because why would sellers go ahead and sell their house unless if it's out of necessity to be able to go ahead and turn around maybe into a possible 8% mortgage interest rate when they're locked in at 3s, 4s, etc. So more or less, we're probably going to have that stabilization pattern that I've been talking about. And do I see the gap that we had when the market correction hit? As you can see, when inventory got really spiked up to where the buyer's demand really kind of hit an all-time bottom, creating the market correction. Is that going to return? I doubt it, to where we're going to see a market correction return to the Treasure Valley, but we'll still have to just continue to monitor the data. But we are overall sitting at 2.62 months worth of inventory, which is up from last month. Looking at existing home inventory, we can say the same pattern. Buyer's demand and the pendings are definitely swinging down, probably because of the high mortgage interest rates, but also because we're in Q4, starting to get into the holiday season. And again, as we saw, we know we spiked up in inventory last month, but it's turning the corner, sitting at 878 available existing home for sale out in Ada County, and 429 sold last month, which puts us up to 2.04 months worth of inventory, which is just up a tick from last month. So the inventory really hasn't shot its way out of control, like especially it did, as we can see, with the big swing between what we had in inventory and what we had in the buyer's demand when the market correction came along. And looking at new construction, again, the same patterns. Mortgage interest rates, holiday seasons, we could see that we're sitting at 634 homes for sale, 148 sold last month, which really kind of ticked down. And again, if we're taking a look at the pending lines, it's just slowly starting to tick down, like we can kind of see, over some of the prior years too, according to these graphs. But according to new construction, they're sitting at 4.28 months worth of inventory, which is definitely up from last month. And really, what is a normal market considered? A normal market is considered when we hit 6 months worth of inventory. Now, has that really kind of changed because of technology in the way that technology has streamlined real estate? Yeah. Is it really the new norm anymore, 6 months worth of inventory? That's the question to be asked. And there's a lot of people out there that kind of agree with what I said because of technology. It just kind of speeded up the process. So where is particularly that new normal? But if you're going off the 6 months, new construction is definitely catching up to that. So now, like I normally play, who's the biggest loser, but it's kind of been more or less who is the biggest gainer since January of 2023, when really the market correction kind of stopped. I know in Ada County, in this particular category, if we're looking at existing homes, that really didn't come until about March of 2023 when the bottom point really hit. But if we're just taking a look at what was going on, especially since 2022, where we're at the 515-100, to the 532 that we've got in existing homes, we're actually up 3.17% since then. But looking at the market correction, where we're sitting at the 586,750 to today's 532, we're still down 9.33%, but chipping away that gap. Now, since 2023, when we hit that 475 in March of 2023 to today, craziness in existing homes, up 10.71%. Wow. And it's just, is it going to continue to go that way, or are we going to have kind of like the wishy-washy we saw in the total single-family homes in the 6 months? We'll just have to continue to watch the data, but I would anticipate more of a stabilization deal until really we get until about, say, Q1, Q2 of next year. Then we'll have to see what's going to happen and how mortgage interest rates are really going to affect the new influx of buyers that are going to come in. So, but either way, since last month, as sitting at the 515 to the 532, we're up a whole whopping 3.19% overall in the existing homes in Ada County. Now, let's take a look at new construction. Of course, we know new construction, especially when the market correction hit in Ada County, really kind of held its own, I would say probably until about August, September, before the market correction started to take a hold. But we know that new construction in both Ada County and Canyon counties have come down the most as compared to existing homes overall. And if we're looking at those numbers, sitting at the 588,945 all the way back in January of 2022 to today's 540, we're down 8.31% overall. But look at that, from the 690 that we had when the market correction was really kind of hitting to today, we are down a whole whopping 21.73%. But now let's look at what's happened since the market correction basically stopped and things started on the stabilization path at first and then on the way to the rise. If we're looking back at January of 2023, when prices were at $494,900 to today's $540,000. Up 8.31%. So it's definitely chipping away, but it still has a long way to go before you get to the levels that we saw when we hit the highest of the 690,000 for new construction. But since last month, again, new construction's on the way up, and the median home sold price from the 532,871 to today's 540, which is at 1.32% raise since last month. So who was the biggest gainer overall when it comes to existing homes or new construction? Well, as we can see, existing homes made more of a gain last month than new construction did. Now, how about days on market? Let's go ahead and take a look at that. Now we can see it's starting to swing the other direction, but it's a little late actually really kind of to start swinging the other direction, at least in my humble opinion, but it is going that other direction, now sitting at 34 days, the average days to sale from when you go ahead and list. And I anticipate that number to go ahead and increase, especially as we get into the holiday season, into Q1. And then when we start getting into Q2 again, of course, we'll see our seasonal swing of that number coming down as more buyers return and activity starts picking up in the real estate markets. But either way, we're starting to go on that upward swing a little bit, but still, it's still indicating a healthy market out here to the Treasure Valley, even considering where mortgage interest rates really are, or even just in Ada County. As we get to Canyon County, I'll show you something a little bit different, which is going to be really interesting to see. But let's go ahead and take a look at the cancels and expireds. So cancels and expires usually really kind of indicate the health too of what is going on around the Treasure Valley. As interest rates rise, generally more cancels will come out as, you know, potentially buyers, they kind of got knocked off perhaps, or they weren't able to, you know, get under contract anymore for the particular kind of house they're looking for, or something just fell out, or even sellers got themselves some cold feet, didn't want to go ahead and make the lateral move over because they didn't want to face the high mortgage interest rates either. But we could see that the cancels really kind of actually dipped a little bit from last month. So again, it's still indicating a healthy market out here in Ada County overall. But we can also see that the expireds went on the way up. So what is that telling me? It's telling me that there's still some sellers out there that are really sticking by their price and not appropriately pricing their house to be able to be competitive in today's market. And so they just went ahead and fell out of their contract. So either way, it's taking a look at the cancels and expireds. We can still see that we're doing relatively healthy out here in Ada, even though now we're starting to go through our seasonal swings, and mortgage interest rates are definitely not helping in that too. So I'm not going to just throw that under the rug by any means. Mortgage interest rates are definitely going to be affecting what is going to happen to the buyers and even sellers coming up in the future here, which should totally slow down the Treasure Valley real estate markets, including real estate markets across the United States. All right, Canyon County, it is your turn. Let's go ahead and take a look at the stats. And as we can see by here, again, the same trend. Median home sold price was on the way up, sitting at $415,495 for this month of September of 2023. But if we're looking all the way back on January of 2022, when we're sitting at $424,900, we're still down, you know, if you're going to compare the 2 years, year over year, to where we're at right now, we're still down 2.21% since then. And then, of course, when the market correction took hold late May, early June, sitting at the $476,500 to what we got today, Canyon County is still down overall 12.80%. But let's go ahead and take a look. January 2023, when the market correction itself really ended, things started stabilizing, then started working their way up. When we're sitting at the $395, $445 to today's $415, $495, we're up 4.82%. That is just amazing, considering where mortgage interest rates are and how everybody was just like, wow, it's going to completely take out the buyers. We're going to have issues all over the place. Well, I don't see that as the issue anymore because people still need housing. And I've been saying that for a long time, whether it be a rental or just getting into housing itself, getting a mortgage, getting their own equity, etc. People need housing. So let's go ahead and take a look though and see what happened overall in the 6-month breakdown. And as we can see by it, Canyon County has really shown its stabilization, kind of that wishy-washy all the way through. I mean, we had some times where it definitely did started peaking up, and especially since January of 2023 when it was doing this and then started going on the rise. But we can see even back in April of 2023, we're sitting at $389,990, then up to $415, then down to $405, $404, up to $405 again, and now back up to the $415. Interesting. But either way, what's going on with basically the supply and demand, out there in Canyon County. And yes, it is cheaper overall median home price than Ada, which is definitely attracting a lot more of the buyers considering where the mortgage interest rates are. There is more of a stabilization trend that is going up. But if we are looking from what happened last month from the 405 up to the 415, Canyon County is up as a whole at 2.52%. So now, here's the thing that I really kind of want to bring up, especially when we start getting into total single-family homes, existing homes, new construction, when I start showing you these graphs, is just the absolute change in the pendings that we got going on out in Canyon County. Because remember that Canyon County's inventory was definitely not peaking up like Ada County's was, but, you know, more or less kind of staying level to what was happening with pendings and solds and intermingling itself. And as we can see by this graph from the total single-family homes, look at the pending line, the orange line. Whoop, nosedive. Okay, so now that could really be because of mortgage interest rates, which I'm guessing that it is. But also we are in Q4, leading into Q1, the holiday season, when things tend to slow down in the real estate markets across the United States. So I had to take a couple of looks myself, you know, back at the data, was like, well, maybe the MLS is wrong here. I mean, really, do we have that kind of a dip in the overall pendings? But it wasn't. So it could be a little bit more, both of those factors, and especially because the median home sold price out in Canyon County is on the cheaper side too. It may because there could be more interest sensitive people out there with those loans to try and go ahead and get the properties that they're looking for. But either way, the pendings went whoop, on the way down. So we'll just have to see what happens with next month to see if it takes an absolute nosedive, which at that point, we'll have to take a look at the inventory and kind of compare what's going on with the overall buyer's demand. But we're sitting at 839 homes for sale in total single family homes, with 404 selling last month, which puts us at 2.07 months of inventory, just up a tick from what we had last month. So let's break them down though. Let's see what happened with inventory in existing homes and in new construction. And as we can see, again, we did have that tick up last month, which was really an oddity for August, because normally in this time of year, things start to slow down. People tend to not list their homes. Buyers tend to jump out. And we just kind of see the seasonal swings that we normally have in real estate. But this month we went lateral, okay? And I got the anticipation in existing homes that we're probably going to be on the way down for the season. But we're sitting at 434 homes with 239 actually selling. But again, take a look at the pending line. Whoop! Okay, which is telling me that next month, definitely the solds are going to go down. They're just not going to be as many. And we'll just have to see if it's mortgage interest rate related, which most likely it is, or it's the holiday season, or a combination of the both, which more than likely, actually, a combination of the both is probably what is doing it. But either way, we're sitting at 1.81 months worth of inventory in existing homes out in Canyon County, which is actually down from last month. So there is less inventory overall. But we're going to see what happens to the buyer's demand overall in Canyon County because of the mortgage interest rates, the holiday season, etc. But let's see what happened in new construction. New construction, same thing, boink, in the pendings. Now, I mean, really kind of a boink. But if we kind of take a look at this, especially at the seasonal swings, we can anticipate this to happen. I'm just kind of seeing the curvature in a little bit more of a heavier direction than I'm kind of used to. But either way, it should probably tend to feather itself out, as tends to happen during, again, the holiday seasons when things kind of slow down overall. But it just kind of made me definitely peek up my eyes and be like, wow, is it mortgage interest rate related, holiday season related, or a combination of the both? But either way, inventory actually ticked up a little bit more in new construction. But you can see it's starting to turn the corner, and I anticipate that inventory is going to come down, especially between, say, like November all the way to, you know, say about mid-January to February of next year. We'll see that seasonal swing go on. But we're sitting at 405 homes for sale in new construction, sitting at the 165. And again, there's, more pendings than there are inventory out there. So the new construction is still selling like hotcakes and really kind of stabilizing itself out there in Canyon County. But it's sitting at 2.45 months worth of inventory, which is up from last month. So now, again, existing homes or new construction, who was the biggest gainer overall in Canyon County for this month? Well, let's go ahead and take a look at existing homes. And as we can see, we're sitting at $399,990 for this month, which puts us up almost $10,000 from what we had in January of 2022, which puts us up 2.49% overall. But if we're looking at what happened at the 425 when the market correction took over to today's 399,990, it is chipping away, but we're still down 5.88% since then. So existing homes is really starting to make up that gap from what we had at the 425 at the peak of the market. And then, of course, the market correction took over, and we were down again down the 5.88%. And then it all kind of stopped when we got to the 339 in January of 2023. And since then, wow, whopping all the way to that 399,990, existing homes in Canyon County have been up 15.24%. Wow, mind-blowing. Absolutely mind-blowing. So definitely chipping away and going the other direction. And if we're looking at what happened between last month, not much of a gain from the 397 to 399,990, just up 0.74% overall. And what about new construction over in Canyon County? Well, let's go ahead and take a look. We're sitting at the 429,990 today, which is up from the 419,990 that we had last month. So up another, again, $10,000, which puts us up 2.32% overall. That's a pretty good gain. Now, do I anticipate that to continue to gain? Not during the holiday season, because usually prices will come back down. But if anything, what I anticipate is more of a stabilization pattern leading us into the end of Q1, leading into Q2. Or if we come down, we'll come down a bit. But I wouldn't anticipate anything like we saw during the market correction. But let's go ahead and take a look and compare it to what we had like last year in January of 2022. The prices were sitting at 465 to the 429,990, which were still down 7.52% overall. And looking at the 549, again, new construction is basically taking the biggest hits since the market correction to what we've got today, still down 21.67%. So if you are looking for your best value overall, you're going to basically find it in new construction in Ada and Canyon County. But since we hit the bottom of the peak, which is actually in April of 2022 or 2023 this year, to what we got today, we started to be on the rise, and we've actually been up since then, 5.61%. So we'll just have to continue, monitor the data, see what's going on. But as we can see by this from new construction or existing homes, which one was the biggest gainer since last month? Well, it's definitely going to be new construction in Canyon County. How about the days on market? Let's go ahead and take a look at the health of Canyon County right now. And as you can see by this graph, it's starting to tick the other direction. So it's something that I totally anticipated to happen, but it's kind of not ticking up as much as I thought it would, basically about this time of season. So we'll just have to continue to monitor, see what happened in October and then November, December. It will definitely be on the way up, but we're now at 31 days on market from when list on average to actually selling the property, which is still indicating that the Treasure Valley markets are doing good overall, instead of inventory just kind of sitting around and us going through a market correction, as we could see. So either way, still looking good at that, but let's take a look at the cancels and expireds. And looking at this graph, as we can see, the cancels actually went back down. Again, indicating, a healthy deal out here. So people are getting to the finish line with their contracts. That's not falling out for any particular reason because of mortgage interest rates, even though we lock, okay, et cetera, et cetera. But sellers are going through with their transactions. They're not just upping and turning around and getting rid of their listing because of what is going on with mortgage interest rates, but also the amount of transactions have been on the way down. So we got to take that into factor too when it comes to our cancels. But looking at the expireds, we can see just like Ada County ticked up again over in Canyon. So again, that is telling me that there are sellers out there that have just set the bar of what they wish to get for their house, and yet it's just not coming to the finish line. It's too high price, most likely, compared to what is appropriate to be able to sell the home for in today's market. So sellers, when we get to the strategies at the end, I will say this again, going in and appropriately pricing your home for today's market is still key in order to sell it for the most money possible and in the quickest time. Okay, so let's get to the big elephant section, which I always like to do in Mikey's monthly market updates, which just kind of goes through and says, well, what is out there really to kind of disrupt what is happening in real estate? And of course, the biggest elephant in the room, which everyone knows right now, is the mortgage interest rates. And why are mortgage interest rates as high as they are? It's because the Fed terrified the daylights out of the treasury markets again. And how do they go about doing that? They went about it by their new SEP projections that they came out with in their last meeting. So this time what they said is wow, okay, we're seeing inflation starting to kick back up, which it was. It did kind of panic them, and the jobs market is still crazy out of control with what they really want the federal funds rate, or the broadsword of the federal funds rate, to do. They want to slow down the jobs market. Well, it's not happening. And if you look at today's data, it's definitely showing that it's not happening, with the non-farms payrolls coming out at an astronomically high level than what was projected, even though the unemployment rate is at 3.8%. So it's crazy with some of the data and the data reporting that's really going on out there, because the Fed is kind of getting a convoluted picture. But what they are getting, though, is a picture saying that employment and the markets out there and services industry, manufacturing, etc., even though services came down a bit and manufacturing actually went up a little bit of a tick, but it's still saying that people are out there spending a lot of money, which is kind of driving the inflation thing. Because remember, inflation just means that there's too many dollars out there to be able to buy up too little products. But if you take a look at certain graphs, we could also see that the amount of currency that's out there that's available to Americans is going on the opposite direction, and wages are on the way down too, which is not good. But either way, it's just painting a picture to the Fed to where they're like, oh boy, should we go ahead and cut the federal funds rate by 100 basis points, which they had talked about in the previous SEP that they threw out. And so they went ahead and they changed their minds. Even though they put a pause on the federal funds rate, which does not directly control mortgage interest rates, what it does have a ripple effect over the 10-year Treasury markets and the MBS to more or less freak them out into selling, which raises the yields. And then when the yields go up, of course, mortgage interest rates really kind of follow that. But either way, by coming out with the new SEP, they said that, oh, you know what? I think we're only going to make 2 cuts. So we'll go to 50 basis points instead of the 100 basis points. And we might not really start drastically changing the federal funds rate until 2025. Wow. So they were hoping to do it in 2024 to come on down the other direction. But now they just telegraphed to the markets, oh, we're going to just keep it this way for a while. So if you're out there looking to buy, sell, invest, keep in mind that the mortgage interest rates, in my honest opinion, are going to be higher and for longer. And we've actually hit decades highs that we haven't seen for 20 years in the mortgage interest rates overall. So if you are looking to buy, sell, or invest, definitely reach out to a great mortgage lender around here in the Treasure Valley. And if you're looking for one, please feel free to reach out to me to go ahead and set that foundation, have that conversation. But that is the biggest elephant in the room right now, is definitely what is happening with mortgage interest rates and what the Fed did with the SEP to go ahead and basically freak out the markets as a whole. But what about some other elephants that we might be seeing? Well, of course, we know that we're $33 trillion in debt in the United States. That is not a good thing, okay? And that number is just going to continue to go up, especially when you got a $2 trillion deficit that we're facing every single year. So our government just needs to stop the spending. And one of the good things that actually happened recently, even though I try not to really get into this, but politics does set the bar always for what happens with the markets. And one of the craziest things that happened, of course, was when the Speaker of the House got the boot. The first time it's ever happened in American history. I've also heard that some people said it's the first time in 110 years. So either way, whatever you want to believe, comment below if you actually really know the answer, but it could be the first time that it happened in American history. But why was the reason that happened is because Gates, who comes from Florida, was actually, Kevin McCarthy made him promises that they would do single spending appropriation bills, which is what they'd used to do back before 1995, which is the best way to govern, which is the way that they should be governing in the House of Representatives when it comes to the power of the purse. So Kevin McCarthy really kind of didn't do that, even though there was a few in there. And it was more or less put to a continuing resolution, or basically one big giant omnibus bill again, or just huge bills that none of these congressmen have time to go ahead and read. And even though I support, what Gates was doing, it has definitely kind of rattled what's happening in the House of Representatives right now. But if we can get a Speaker of the House in there that wants to go to single spending resolutions like they should be doing overall, that is a good sign to be able to go ahead and slow down just our crazy debt that we keep doing. And then, of course, as we know, as we get rid of this joker,
come on, man,
and we get a good guy back,
and we will make America great again.
We definitely know that we're going to do better overall as a nation. Energy production should hopefully return back to energy independence and maybe even energy dominance, which is great for the United States. But right now, the scary thing, and I've said it in a video that I'll go ahead and put towards the end, and I would like for you to watch it, is that the value of the dollar is decreasing, which is not good. And the BRICS nations out there are on the rise. China is leading the way, and in fact has basically flipped Saudi Arabia, which is bad for the United States overall. If we lose our status as a world reserve currency, that is not good for anyone at all. Say hello to post-World War I Germany, because that is what's going to happen. So please pay attention to that, especially pay attention to that as we're getting up to these election cycles for the presidency, etc. Coming up, please make the best decisions as you possibly can in order to save the United States, because we're going to need it. So those are just a couple of big elephants that I wanted to go ahead and address. Of course, another one would be credit cards if you want to go ahead and talk about that. But I'm going to make a whole nother video about that, explaining what's going on. I can almost guarantee that, the credit cards, of course, went out of control because the short term, the federal funds rate controls that. For sure. And when the federal funds rate went up, boy, did those fees, and just put people in a lot of debt. But you're going to see a lot of debt resolution. You're probably going to see a lot of bankruptcies turn their heads going up. But we'll go ahead and make a video about that a little bit later. But now let's go ahead and let's get into the best strategies that you can do if you're looking to buy, sell, invest in real estate right here in the Treasure Valley. Okay, buyers, let's go ahead and start off with you like we normally do. And of course, as I mentioned, what is one of the big elephants? It is the high mortgage interest rates. Yes, they hurt. Okay, but you know what else is hurting right now? Median home prices. And even though that's on a grand scale, and we know that real estate's a little bit more on the local end than anything, if you want to get into local talks about any particular city area in the cities, please feel free to give me a call. Would love to discuss them with you. But either way, we know that the median home price as a general here is showing that it's on the way up. So you're getting hit with a double whammy right now. Now, with the inventory showing that we're going to have an influx in inventory and the buyer's demand is going to drop off again like we saw during the market correction. We're not seeing that either. More or less what to anticipate through the holiday season is more or less a stabilization or prices coming down just a tick, which normally happens on a historical deal in real estate during the holiday seasons between Q4 and Q1. But we'll just have to continue to monitor the data. But again, if you're out there thinking that the real estate market is just going to implode on itself, there's really nothing out there saying otherwise, unless we get one of the big elephants, which we don't want any of those to happen, because everybody's going to be in big, deep water, especially if we lose our status as the world reserve currency. That is the scariest one. But as going into the holiday season, though, inventory should tick back down a little bit. Your competition's going to tick down too. And if you're looking to get into a home again without like any fights, etc., which most likely you're not going to face out here. But if you are a serious buyer, they usually come in during this time to be able to go ahead and purchase a home. So I know that the rates are absolutely killers. The home prices are on the way back up, which is not helping out either. But if you are looking to get into a home, you might want to do it while home prices are still on the cheaper level. You are going to have to take that pain of the mortgage interest rates for a while. The Fed has definitely came out and made that known. I used to say by halfway of next year, at least by the end of Q2, hopefully rates will start coming back on the way down, but I just don't see that happening. And then here's the other thing is that once those rates do come back down, buyers, you can absolutely anticipate a frenzy of people to come with it, because you're not the only one that is waiting for mortgage interest rates to come down. So if you'd like to get the home of your dreams and have the best overall picture to be able to do it without a lot of the fight and hassle, and I know you're going to have to take the pain of the mortgage interest rate, but you can go ahead and refinance later. But either way, you can go ahead and get that right now in today's market. But I do know and I do understand that the mortgage interest rates are very interesting. But when you just start looking at, say, new construction, a lot of the builders are still handing out concessions, even though some have stopped. But we can go ahead and take those concessions to be able to go ahead and buy down your rate to a more affordable level. Or there's such things as known as a 2-1 buy down too. I'll go ahead and post the video of that at the end of this if you'd like to go ahead and review it and watch it. But if you'd like to know a little bit more about that, feel free to reach out to me. And if you were to do a 2-1 buy down at this point, I anticipate by 2025, things should be back to normal, at least according to what the Fed is saying that they're going to do, and things should be good. So the 2-1 buy down could be actually very advantageous and not cost you as much per se as maybe buying down the rate. But again, reach out to a loan officer. Please give me a call. I got wonderful loan officers for you all over the Treasure Valley that can go ahead and start setting the foundation for you today. All right, sellers, it's your turn. And sellers, you're probably still saying it. Why am I going to sell right now? And you know what? You're absolutely right. Why would you? Okay, because rates are just on the way up now. In fact, with some lenders, they've actually even already hit the 8s. But, as of today, from what I see off Mortgage News Daily, we're still up, 7.6, 7.7. Kind of hovering around that really for the week. But it's absolutely crazy right now. And I completely understand if it's not the right time to sell for you. But really, what have I said before? This is now the time of ushering in selling for necessity. So say your job wants you to come back, or the job wants you to move, or your family's moving out, or something's really happened to where you've got to get up and uproot yourself. That is really the sellers that are coming out into the market to be able to go ahead and do something like that. And like I always say, what is key, and as we can see it by both cancels and expireds graphs in Ada and Canyon counties, the expireds are on the way up. And why are the expireds on the way up? Well, it's because there's a lot of people just holding out for the price they say. They do not want to reduce in price, etc., even though price reductions have kind of gone up on a U.S. scale. Not really here, in the Treasure Valley yet. We'll just have to continue to monitor that data. But properly pricing your home in today's market is absolutely key to get it done, and to get it done in the most time possible and for the most money possible. And if you are looking to sell, please feel free to reach out to me. Would love to come over, set up an appointment with you, do a comparative market analysis, show you where your house is priced in today's market, have a nice chat with you, show you the strategies that I have to be able to go ahead and win in today's market. And if you are looking for that opportunity or that appointment, please feel free to reach out to me. Love to go ahead and set that up with you. And I look forward to speaking with you. And sellers, we'll talk next month. All right, investors, it's your turn. Well, mortgage interest rates, just like with the buyers, is not helping you, not helping you at all. Unfortunately, the mortgage interest rates, if you are looking for a secondary home and you do need to obtain a mortgage, it's going to cost you more in the overall percentage rate of what you're going to be paying. Your mortgage interest rate, it's going to be higher than if you have a primary residence. And then there's also the DSCR loans out there. If you are trying to, say, go off of, an average of what you got monthly and going towards that to be able to qualify, you can see that those are astronomically high too. I can't even begin to make a guess, but I would probably anticipate that they're around the 9s. It's probably not very pretty right now. So investors, if you are trying to get a mortgage for a secondary home, it's going to hurt. Again, you're going to have to just hold on, and you're going to have to now hold on for longer because the Fed really said, now we're going to keep the federal funds rate longer instead of doing the 100 basis point cut that they said that they were going to do. Now they say they're going to do 50, and who knows the next time they come out with their SEP projections, but they're saying that things probably won't get better until 2025. So it's going to be that way. But if you're paying in cash and you're coming out here, well, you can see that the median home sold price is actually on the rise. So it might be a great time, investors, to come out here and get to a house while it's still on the cheaper end. Do I anticipate prices to start diving down again like we saw during the market correction? No, the data is not showing that. And really what's going on, minus what I said during the big elephant, which is what we don't want to happen. So please review back to the big elephant section. If that happens, oh boy, we're all in trouble. But investors, if you are coming in, of course, cash is king. And if you are paying in cash, it's going to give you the best capitalization rate overall. And right now, it's going to be probably the best timing. We'll have to see what happens with the holidays because historically prices come down a little bit more of a tick. But right now, they're definitely not showing that direction for the month of September. So we'll just have to continue to monitor the data. But investors, if you'd like me to run capitalization rates for you, discuss this a little bit more and further, with you, send you to a lender to be able to talk to set a foundation, please feel free to reach out to me. Be more than happy to discuss it with you. All right, and lastly, renters, it's your turn. Of course, I say this all the time. Renters, you are paying 100% interest rate, and the rents are actually back on the way up. So they're starting to get on par or even above in most points to an actual mortgage, even where the mortgage interest rates are. So again, do your homework, going in, but the markets are back on the rise, as are the prices, the median home sold price overall for homes, and unfortunately, mortgage interest rates. So you might be saying out there, well, I'm just going to go ahead and I'm going to wait for mortgage interest rates to come back down before I can buy. Or maybe you might be just in those shoes, and that's the unfortunate way that it is. Well, if it is, it kind of depends. If you're looking for a new construction house, renters, if you're looking for new construction, a lot of them are probably still offering incentives, and we could do some things to buy down your rate to make it more affordable. Or there's a 2-1 buy down that I went ahead and brought up. Please see the video at the very end. Click on the link if you want a little bit more description about the 2-1 buy down. But there are options still out there if the mortgage interest rates are on that higher end. And we are hearing rumors that price reductions are coming back around the U.S. Haven't seen that data yet hit for the Treasure Valley, but we'll just have to continue to watch what's going on. But maybe home prices might be coming down a tick as what is historically normal. But if you're looking to see if you qualify, say you haven't even picked up the phone and you're looking to set a foundation for home ownership, well, then please feel free to reach out to me. Love to put you in contact with some great loan officers that I really love and trust out here in the Treasure Valley that will set that foundation for you to be able to go ahead and make the home purchase. But prices are back up on the rise. I want to let you know, of course, mortgage interest rates are painful right now. But if you are just waiting because you want to see the mortgage interest rates come down, well, so are a lot of other Americans out there waiting for that to happen. So what could that possibly do? It could possibly put us in another pandemic era to where we could see home prices just absolutely skyrocket again. So because inventory again right now is low, we'll just have to see what happens when that possibly hits. But renters, I look forward to you if you're looking to start that journey to home ownership. All right. Well, thank you very much, everybody, for taking the time out of your day to watch this video. I know that they do get incredibly lengthy, but I like to go through in detail to show you exactly what is happening here in the Treasure Valley. And then, of course, discuss some of the big elephants that happen that we could possibly be facing that could possibly interrupt real estate or life as we know it here in the United States. But either way, if you are looking to buy, sell, or invest right here in the Treasure Valley, feel free to give me a call, shoot me a text, send me an email. Would love to go ahead and speak with you and talk about the best situation to go ahead and get you into the perfect home right here in the greater Boise, Idaho area or the Treasure Valley as a whole. I also do service some other areas too, so please feel free to reach out to me. But before you go, if you did like this content, please click the subscribe button below, hit the notification bell so that you're constantly in tune to all the videos that I do come up with. And please comment below or share this video with somebody else, but comment. I'd love to hear your thoughts. I'd love to hear what you think is going to happen in real estate right here in the Treasure Valley or the U.S. as a whole. And I look forward to fielding those questions too, or those responses, via the comment section. Or even if you have some questions, put them down there. I'm more than responsive to that. But either way, I look forward to hearing from you. I look forward to the day that we speak. I look forward to the day I call you my neighbor. God bless. Until then, thank you so much. Bye-bye.